Alrighty, folks, we are going to talk with Mr. Dan Bird. We are going to check in on the market. We're going to talk inflation, Max Payne, 10-year note, and even share with you some quotes we are capturing from various Fed presidents. But I think we've got to start with the market. If memory serves, and I could be wrong, I think we're on a 6-day losing streak. Is that right?
Yeah, we are.
6-day losing streak. That
Max, Max Payne, baby.
Max Payne. All right. So break it down for us. What is really going on? Obviously, there was a bump a couple of days post election, but yeah, 6 days, 6 negative days. Something to pay attention to.
Yeah, no kidding. Let me highlight this by showing a chart because that
Shocking.
will
We're going to see a chart.
that will that will tell you the 6 day um, trend. So this is my website, breakpointtrading.net, not .com, it's .net. Free newsletters right there. I also have a YouTube channel for those that haven't found me yet. It's just very easy. Just go to this site and click on this button in the upper right. And I try to post every day. It's the daily scan is what I call it. So I scan for stocks. I show how to pick stocks, buy stocks, and set stops. Right now, interestingly, so the way the whole process works is the scan will identify when the market is going up and being positive, it will identify good stocks that are at buy points.
Mhm.
When the market rolls over like it has this week, all of a sudden the scan doesn't return anything.
Oh, shocking.
So there's nothing to buy. So I mean that's really the way it's supposed to work. And
Yeah,
the stops will automatically take you out as the market starts going down. You'll just automatically be in cash.
there you go.
So that's how it works.
Very
But
cool.
yeah, let's take a look at let's look at the S&P and the Nasdaq actually. So there's the rollover. I mean, you could almost see it happening in slow motion
Yeah.
right up here. Let me
Yep.
turn on my little cursor thing right there. All right. So if you count back 5 days, there's Friday, Thursday, Wednesday, Tuesday. Monday was the peak. Monday is where it hit the peak right there.
Hmm.
But this whole week, you could basically see it, and even the last couple of days of the week before, you could basically see it in slow motion. You could almost tell what it was going to do.
Hmm.
So the
Okay.
question now is that just starting?
Yeah,
So
I think there's a lot of. I mean, I spoke with Joseph Wang, aka the Fed guy, last week, and his opinion, Dan, is the first half of 2025 is going to be ugly for the market. And this is a guy who called S&P 6,000, right? I interviewed him a year ago and he said we were going to 6,000 and he got it right. So
yep.
um, he's particularly nervous about the first half of 2025.
Well, I've been saying that for quite a while.
Yep.
I've
Yep.
been saying that we may get a rally into the end of the year, and that could start next week. And we'll probably carry into the middle of January just because structurally that's the way the market's set up.
Mm-hmm.
But then from the middle of January on, I've said before, I said I think it's going to look similar to 2022.
Which was not a particularly good year.
It was a bear market. Yeah, it was
Yeah.
a cyclical bear market. We pretty much went down the whole year until October 27th. In fact, right here, here's the bottom right there. That's on
Yep.
this chart.
Yeah. There you go.
There's the bottom in 23. That was the 23 bottom, but there was one in October of 22. 22 was just all year just went down. And that's
Yeah.
what I think next year is going to look like. So I agree with him.
Yeah, I think that, and again, a lot of people, again, a lot of this is, we have a new administration coming in, cost of capital is higher than expected, tariffs. I mean, it's just, there's a lot of stuff that's going to be disruptive and it's going to cause, in Joseph's opinion, it's going to cause companies to eat margin, which again, lower earnings per share, lower multiples, i.e. stock market falls down, right? Crashes.
Right. So that's interesting. You should bring that up because that's something I wanted to cover today.
Okay.
So if we go back to my website, and by the way, this little market bias chart, I update this every day,
Mm-hmm.
and it has been incredibly accurate in showing when the market is moving up and starting to move down. This is the election right there. One
Mm-hmm.
week. You can see how short-lived that was.
Yeah.
But let's go to the charts and let's talk about the election let's talk about the new administration, the transition team, and because I had a client, a subscriber send me a note saying, "What happened to biotech last week? What the heck happened?" By the way, these little green and red circles here are the top 10 and bottom 10 industry groups for the week.
Right.
And you can see biotech was one of the top of the
Robert
down.
F. Kennedy Jr. happened to biotech.
That's exactly what I said. I said that's an easy one. RFK Jr.
RFK Jr. That's what happened to biotech.
So let's take a look at biotech.
Oh my God.
How
Oh,
about that?
that is ugly.
So yeah, it's interesting because I just updated all of these charts, all the industry charts, and as I was going through, I noticed the trend and how it maps to the new administration.
Well, let me just ask a crazy question, and the answer is probably we have no idea, but I'm going to ask it anyway. Can you see anything in this chart where there's like a support level where you might want to nibble, or is
Well,
RFK Jr. such a wild card? You don't know.
um, I'm not so sure he's a wild card. I think everybody pretty much knows where he stands. He's
Yeah, he's
against,
been pretty
and
clear.
I wanted to, and somebody said this in my community meeting that I do here
Mhm.
where I live yesterday. They said, yeah, he's against vax. He's an anti-vaxxer.
Mm,
I said that's not what he said. He did not say he's against vaccines.
right.
He said he's against the COVID vaccine.
Yes,
He
clearly.
actually he actually came out and said, I take vaccine. I take the flu vaccine every year.
Hmm.
I'm against the COVID vaccine.
Yeah.
So he's not an anti-vaxxer. He's an
No, I agree
anti
with that. Yeah, I
he's an
think he gets
anti-COVID.
branded. I think he gets branded a lot. And
Right.
again, I am no scientist, no biologist, none of that stuff. But I think RFK brings up some very interesting questions in general about vaccines. Like when you and I were younger,
Right.
I don't know what the number is. We had 12 vaccines, like polio and some
Right.
other stuff.
Yeah.
Now, when my daughter got her vaccines, it was like, I don't know, 28 or 30. Now it's
Right.
like 45 or 50. I mean,
Yeah.
we got to ask ourselves. And oh, by the way, autism is. I mean, there's some scary correlations. I don't know if it's
Yeah.
causation, but there's scary correlations.
Yeah, there are. That's right. That's exactly right. So at any rate, this is clearly the RFK effect. You can look at the number of bars. There's one, two, three, four, five. That's one
Yep,
week, the
that is
whole week, except
down.
for Wednesday, it kind of took a break a little bit, but whole week just going straight down. Let's
Mm.
look at pharmaceuticals. That's going down.
Yeah.
Let's look at renewable energy.
Mhm.
That's not looking too good. Let's look at banks. Banks are actually looking pretty good.
Wow. Look at that gap up.
Yeah. So financials are actually doing better. Let's look at semiconductors. Semiconductors was one of the bottom 10 this week.
Yeah,
And we
there's a
had,
lot of stuff going on. We had I forget that one company who's can't pass an audit. I forget what it's called.
yeah, SMCI. Right.
SMCI. But then we also had an ugly number from AMD.
Yeah. AMD didn't, they missed. By the way, for this, I'm going to put this in next week's newsletter because I found it too late. But when you talk about SMCI, oh, did I put it in here? Oh, maybe I didn't. Darn. Too bad. Oh, you know what I did? I actually already started the newsletter.
Ah, look at you already working on next
So
week.
I put it in for next week right here.
Ah, Enron. Enron smoked me. Oh, I hate that
So
company.
so look, this is a guy. He's got his glasses. It's kind of blurry. It's super micro. That's SMCI.
Uh-huh.
Then he puts his glasses on. And he sees Enron.
Folks, if you don't know Enron, go look it up. It's a spectacular story where they thought they were smartest people in the world and they were nothing but crooks.
Right. And it could be turning out that SMCI is the same thing. I'll look at that chart is pretty ugly. But let's look at
Oh, yeah.
semiconductors since we've got NVIDIA coming up this week.
Mm-hmm.
So semiconductors went down too
Mm-hmm.
the whole week.
Yeah.
And subscriber sent me his chart saying this looks like a Head and Shoulders Looks like it's rolling over. If we look at Nvidia, it just had one day down
Mm,
because everybody's waiting for earnings.
right.
So next week, Nvidia is either going to save the market or kill the market.
Yeah, and Nvidia's in the Dow now. I think got added to the Dow.
Yes, that's correct.
Intel's out and Nvidia's in.
Intel moved to the Nasdaq. Let's look at software. There's software. There was an article from Tom Bowley. He published an article. I think it was Wednesday. So that's the highest candle right there.
Mm,
On that day, he published an article saying software is where you want to be.
mm. Oops.
And so I made a comment saying on my YouTube channel, I said that I don't disagree with him. I think software will do well in the fourth quarter,
Mm-hmm.
but I don't agree with his timing.
Ah.
I don't think he should come out with an article saying software is the place to be on the day that it hits its top.
Cycle peak. Yeah.
Right.
Yeah.
So I don't disagree with his thesis. I just disagree with his timing. That should be a lesson for everybody with any article that you read anywhere at all.
Mm-hmm.
The thesis may be correct, but it doesn't mean to do it right now.
Yeah.
It's the same thing we'll talk about in the next session on the debt, but what Paul Tudor Jones saying about the debt. But I'll save that for them. But so there's
well, let's look at the 10-year. The 10-year. I want to go to
any other industries based on the new incoming.
Oh, I would think energy would be the one.
Here you go. Pipelines was top 10. Pipelines was in the top 10. He's probably going to open the pipeline again.
Oh yeah, XL pipelines
as well as other pipelines.
Mm-hmm.
There's pipelines.
Wow, that's a nice chart.
So I mean that's sort of like expecting Trump to win.
Yeah.
Right there. But ever since the election, just screaming higher. So it was just really interesting just looking at all these different industry groups.
Actually, you know what? Let's look at Bitcoin real quick because it had an interesting move last week.
Real quick, let's look at automobiles. Automobiles, huge run higher, and I think this is because Elon is part of Trump's group.
Yeah, Tesla was
huge move higher, and now it's coming down.
Yeah, he's going to kill the EV tax credit day one. We're being told.
Yeah, have you seen the interview with Elon about that?
I've seen him say that we don't need tax credits. Get rid of it. We don't need to help.
Blah, exactly.
Blah, blah. Yeah.
Like, not only for Tesla. He said when Tesla started, we didn't have any tax credits.
Yeah,
I
think
GM. It was GM that lobbied for them so that they could get their EVs into the market.
Yep.
So we don't need them. People are going to buy the cars because they like the car, not because there's a tax credit.
No, I agree with him. So I think obviously the EV tax credit will hurt Tesla, no question, but it could kill other companies.
Yes, that's right. And he said, in fact, kill all subsidies. We don't need subsidies.
Don't need subsidies
for anything, including oil and gas. Kill those too.
Yeah, I heard that. I did see.
So all right, so Bitcoin. Yeah, Bitcoin is interesting. There's, by the way, these solid blue lines, these are Fibonacci levels based on the work by the mathematician Fibonacci.
Mm-hmm.
It's found in everything. It's found everywhere in nature, and traders use the numbers to determine levels for support and resistance. And you can see there was the high right there, 73.5. And it blew through it. The next level is 102.5. So
I actually asked my audience, I think it was on Tuesday, the first time Bitcoin went over 90. How many of you think Bitcoin will be 100K before the end of the year? And it was 85% of the audience thought Bitcoin would be 100K by the end of the year.
Very good.
Unscientific, but
right.
A lot of responses. It's like 100 responses.
That's momentum.
Yeah. Exactly.
Everybody's piling in. So yeah, the next level is 102.5, and I don't think there's any doubt it's going to get there. It's at 90,000 right now. It hit 90, almost 94 this week. So I mean, it's basically almost at 100.
Yeah, pretty crazy.
So Bitcoin just keeps going higher.
All right. Well, now let's flip to the 10-year because we got the Fed
Yeah.
talking smack.
Yes, exactly. So my my screen for my YouTube channel on Friday, it said Powell is scarier than Max Payne.
Yeah. Well, Jerome Powell said on Friday the Fed is not in a hurry to cut rates, which is a
That's
drastic
right.
change from a couple months ago.
Not he that's what he said. It's not in a hurry to cut rates. He did
Yep.
not say he won't cut rates. He did not say he's raising rates. He just said we're not in a hurry to cut rates.
And again, I think he's just telling the market higher for longer. We've got Susan Collins saying no big urgency to lower rates. We got Barkin saying hope Q1 inflation numbers come down, which you and I have talked about a bunch. It's going to happen. And then
Yeah.
I'll do one more. Fed President Goolsbee. There's a dispute on the neutral rate. It could support slower cuts. Folks, the Fed's not cutting 8 times. The Fed's cutting 3 or 4 times. And oh, by the way, they've already cut 3 times. They're almost done.
Well, they've cut twice, but 75
Well, 3
points.
cuts or 325. Correct.
Right. But I think they'll cut one more and then they'll stop.
Now, do you think that cuts in December or do you think it's January?
I think it's December.
Yeah, I
And then
think there's a lot. Yeah.
I think they'll stop going into next year until they see the economy starting to crash.
Yeah. Do you think there's a non-zero chance there's zero cuts in 25?
Um, that's a hard question to answer. I do think there is a non-zero chance of no cuts in 25.
But it sounds like your base case is economies in pain and the Fed cuts.
That is correct.
Okay. I'm with you.
And unemployment will start to tick higher.
Yeah, the
Yeah.
first half of 2025, I'm particularly nervous about because
Yeah,
again,
me too. And
rates are going to
I've
be
said that for a
higher.
while.
Yeah, the
Yeah.
rates are going to be higher. It's going to cause all kinds of things to slow down. It could be a cascading set of things, and we could have negative wealth effect if the stock market drops 15-20%. I mean, we could get a lot of negativity in that first 6 months.
We could, but for those that are paying attention and those that listen to your channel, this channel, they will know that's coming. They
Correct.
will position themselves correctly. They
Correct.
won't have that kind of pain. In fact, they will actually make money when the market's crashing.
No, I agree with. I love how your mind works because that's what we're trying to do. That's why we show up every Sunday to have these conversations.
Mm-hmm.
Our community will do better than most,
Right.
but that doesn't mean the country's not in pain.
No, no, absolutely not. No, the rest of
Yeah.
the country economy won't do well. So you ask about the 10-year. So here's the way I want
Yes,
to
please.
show this. I'm going to show it with the 40. This is a 45-year chart
Okay.
looking at mortgage rates. And I use this chart for a guy on LinkedIn, an economist, by the way,
Mm.
that showed a chart saying, okay, massive inflation and higher rates are coming. The 10-year is already screaming higher. And he showed a chart of the last 6 months.
Okay. Do you remember
And I
his name?
said, I don't. I'd have to go look it up.
All right. Well, send me a text with it later. I want to look it up. Okay. Go ahead.
Okay, sure. Yeah, you can follow him on LinkedIn if you want.
Mhm.
And so I sent this particular chart. I responded with this chart. I said, well, that's true if you're looking at it with that close of
Yeah.
a
Zoom
magnifying,
out, buddy. Zoom out.
but you have to put things in perspective. So let's put it in perspective. Let's look at 45 years.
Mm-hmm.
So here's the 30 year, the dark blue line.
Mm-hmm.
The pink one is the 10-year. The Fed rates are up here, the gray background, right? Here's the S&P way up here. These horizontal red lines is a quadrant. It basically
gotcha.
just draws 4 quadrants across this whole 45-year period. So it identifies where the middle is.
Mm-hmm.
So notice where the middle is.
Yep.
We are just
So,
getting back.
so,
We're just getting back to normal.
so let me just make sure I orient everybody. So on the left-hand side is the 10-year note rate. On the right-hand side is mortgage rates. Is that correct?
Correct. That's right.
Got it. All right.
Yep. So 10 years over here.
Mm-hmm.
Fed rates are right here. And actually, you can barely see them, but The Fed rate is at 4.83 right now,
Correct.
right there. The 10-year is at 4.42
Hmm.
right there. And mortgage rates are at 6.78.
Got it. Okay.
Okay. But the important thing is, number one, notice how mortgage rates and the 10-year kind of move
Move
together,
move together. Yep.
right? And notice how the Fed rate does not necessarily affect the 30-year mortgage or the 10-year, because the Fed rate is the short term and the
Hmm.
other two are longer term.
Yeah.
But the important thing, the important takeaway from this is that we are normal. Everything is normal. In fact, Fed rates are actually coming down to normal,
Correct.
right? 30-year is normal. The 10-year is a little below normal
Mhm.
for a 45-year period.
Yeah, one of the things I'm trying to get my audience to think about, because again, I do think the first half of 2025 is going to be dicey, and it really anchors on rates being higher than people were prepared for. So I've been on record saying that I think mortgage rates might average 7% in 2025. Um,
Yeah, I mean, I think that's very possible. We had this discussion yesterday, and one of the things I said was, when the 10-year was going up because the Fed was fighting inflation. So 22, here's 22 right here.
mhm.
So 22 to 23 was a cyclical bear market. You can see it if you look at the gray area back here, the S&P.
Oh yeah.
You see that? So that was the bear market. I think that's what 25 is going to look like, similar
Mhm.
to that. So we're going to come down from up here down to here, something like that.
Yep.
But during that period, it's because the Fed was trying to fight inflation and they were raising rates rapidly.
Hi-
Look at the
Highest ever,
yeah.
fastest
Look,
ever, fastest.
you can see it right there. I mean, if you go back all the way back 45 years, this is the steepest one of all of them.
Hmm.
All right. So at the same time, the 10-year was going higher too. And
Yep.
that's the reason the market was coming down, because all of those things were happening. Now, the 10-year is going higher again, even though the Fed rates are coming down. But now it's not so much because of inflation. Inflation is pretty much tamed. Inflation is going to be below 2% by spring. We've talked about that.
Yeah. April, May. Yeah.
Right. So now the 10-year is going up because the economy is strong. Sometimes it's actually a good thing for the 10-year to go up.
Hmm.
So this
Well,
might be one of those.
one of the things about the 10-year going up, I think we would be remiss is, um, there's a lot of expectations I mean, we've already seen it. Inflation expectations are up because of the new administration. There's an expectation of tax cuts coming. There's an expectation of corporate taxes going lower. There's 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 a lot of expectations that are coming, and in that environment, deficits go higher, which means the 10 years should go up. I mean, it makes
That's
perfect
right.
sense.
Yeah, that's right. So what do you think of Elon being the Department of
Government
Government Efficiency?
efficiency.
Yeah, Dogecoin.
Uh, well, I think it's funny you bring this up, because one of the articles I read this morning is the Department of Defense failed their audit again. Right? It's like
Hmm.
seventh year in a row they failed their audit. I saw another article about the government can't account for like $900 billion in this or that. I'm like, geez, this
Right.
is this is unacceptable.
This is
So,
this is a layup for Elon.
oh, I know, right? It'll be interesting to see
He
what
said he
happens.
said he can cut 2 trillion out of the debt.
I'd be happy with half that, but
So did you hear what he's going to do?
I mean,
He
I
pro-
don't, I
he's
haven't
probably
heard.
already working on it. It'll probably be ready by inauguration.
Oh, I'm
He's
sure
gonna
he's working on it.
he's gonna create an app that shows all of the government waste.
Hmm.
So you can go onto his app and you can see that the government spent $9,000 for a toilet.
Hmm.
So all those things he's going to uncover, he's gonna make them let the light of
Public.
day shine on them, and
No, I
he'll
think
let
that's wonderful. Embarrassment and sunlight is a great disinfectant.
yeah. Not only that, but Americans can comment. They can
Yeah.
leave what their outrage basically, and he is going to identify the congressmen and senators who are voting for these things.
There you go.
So you'll have a chance next time to decide if you want to continue letting them do that or not.
Sunlight is a great disinfectant. It will be something to watch. That is for
Yeah.
sure.
I mean, I'm a big proponent of giving them term limits.
Oh,
We,
absolutely.
we as Americans give them term limits. Go to the primary, vote in the primary, and never ever again vote for an incumbent.
There you go.
We can
Yeah.
give them we can give them term limits.
Yeah.
All right, there's one last thing I want to show on this session, and that is the Max Payne report.
Yep.
All right, so here's Max Payne. And for those that are interested, go back a couple of days on my YouTube channel, and I explain how Max Payne is created.
Love it.
Basically, it's just the balance between calls and puts in the market. And just a quick way to understand it is if the market had been going higher, significantly higher, going into the week of options expiration, which was last week, this past week we just ended, then it likely will do the opposite.
Mm.
So Max Payne means it will come down. If the market had been going down significantly before options expiration week, then options expiration week will likely do the opposite. It will go up. So think of it like opposite George week if you watch Seinfeld.
Like it.
All right, so here's the SPY. I'm just going to do these top ones, and I want to highlight that this does not mean it will hit this number. It just gives you a directional cue of which way it's going to go. Now, this was done based on Friday, the 8th. So the close on Friday the 8th, and I'll show you what that looks like. So all of these numbers here are based on a week ago, a week before the expiration. Mm-hmm. So as the market started selling off, these actually probably moved up. So these Max Payne numbers moved up because there were fewer calls. People were getting out of their calls and buying puts instead, right?
Right.
So what this negative number means is that there were more calls than puts.
Got it.
Right. So in order to balance it, the market makers, if the market starts to fall, they're just going to allow it to fall, let it go down. And all those calls expire worthless, and market makers don't have to pay out the premium. So they stand to make billions of dollars just by not paying out all that premium. So that's why it usually does the opposite. So it was expected to call based on Max Payne, expected to call. Now I'm going to show you these three charts, and I have the Max Payne numbers right on the chart, so we don't have to go back to this.
Okay.
But I'll show you where we are. Here's the SPY. So this arrow up here was a week ago. That was the day that the Max Payne report was run. Right, so almost at the peak. So remember, this is Max Payne right down here. Remember, I don't expect it to actually hit that number, although that's a pretty good support line, frankly. But it does give you a directional clue. So you can clearly see that all week the market has been going down. Normally, Max Payne will last into the first couple of days of the following week. So next week, I think the market's going to continue to go down. Okay. Will it actually hit the Max Payne number? Probably not. I mean, it could, but I don't think it will. But it certainly has more to go to the downside.
Okay. Got it.
So there's the SPY. Here's the NASDAQ, getting even closer to Max Payne. So same thing. This is the Friday before that the report was run. Max Payne indicated that there would be a sell-off last week, and there certainly was. And I talked about all of this on my YouTube channel on Tuesday, as soon as the report came out. That's the nice thing about doing the YouTube channel, because the report comes out on Tuesday, and you and I don't meet till Sunday. So it's basically, it's already happened. But in the YouTube channel, I can do it in real time practically.
Love it. I'm so happy you're doing daily content. The audience is going to love it.
Yeah. So there's the Max Payne level. I think we still have more to go. So expect more selling next week. And then the last one is the Russell 2000. Look at that. Russell 2000 looks like the worst. That's the small caps.
Yeah.
So it's heading towards Max Payne as well. Again, probably won't get there. In this case, it actually might, but it probably is going to close the gap right there where that gap is. So may not get to the line, but it gives you a directional clue. And if you know that, if you're a long-term investor, you don't have to do anything. This is just noise. If you're a swing trader or a trend trader, then what this tells you when this report comes out is I'm not buying anything new this week.
Right.
I might hang on to what I have. I might move my stops up, but I'm not buying anything new for
Got it.
sure until the whole market decides what it's going to do. Is it going to have that end of year rally? I think if it is going to, then we will need to see clues of that by the end of next week.
Okay.
If we don't, that end of year rally could be in jeopardy. I still think it's going to happen. I think the end of the
Mhm.
year is still going to be okay. But next year, like I've said many times, next year after the middle of January, I think we're in for a big sell off.
There you go. Well, this is a lot of fun, folks. Pay attention for video number 2, where we talk about the national debt, Paul Tudor Jones, and the like. But before we do that, let's go back to your main page so we can show people how to get on your YouTube channel.
Yep. Just go to breakpointtrading.net. Right on the home page. It's on every page, actually. In the upper right, there's a little button for the YouTube channel. Just click on that, and it'll take you to all of them. So
Oh, I love what you're doing now. Look at that.
there's there's the one with Powell on Friday.
Awesome. And you're doing these 5 days a week. They go live 7 p.m. Eastern, correct?
7 p.m. after the market closes, usually. And yeah, I've got them scheduled to go live 7 p.m. Eastern time. I put the dates right on the top of them
Yep.
because one of the things that bugs me about people that doing YouTube is I can never tell when they did them.
Yeah. I like
So
it.
I'm just putting the date right on the top so people know what day it was.
Beautiful. Thank you, buddy.
All right, talk to you later.